Hello, everyone. Welcome back to my channel. Today is another episode of Market Update. And in this specifically show, we're going to use a lot of time to talk about numbers and charts. There's a lot of things going on in Phoenix real estate market nowadays. As some of you may already know through previous video that I have, more listing get onto the market, less demand on the market right now. The price is going south, slowing down, and things like that. So I have been collecting all the, especially at this time after 2 months of interest rate going crazily. Now the market start to see some very how do I say it? Very alarming numbers. All right, so I'm gonna share with you all of those numbers so that you are all in the loop of the most recent update news. Okay, so the first thing that I want to talk about, let me share with you the screen, is this chart right here. Okay, so this chart right here show you the months of supplies. Okay, months of supply right here. And again, by the way, all the charts that I have today is from the Comfort Associates. Okay, they are very great real estate, reliable real estate data company in Phoenix area. Right, so thank you so much for those information. So as of today, as of the 18th of June, we have a month of supply is June is 1.4 months. Okay, 1.4 months meaning that if nothing coming onto the market, nothing new coming onto the market, it's gonna take about a month and a half, about 45 days for all the current listing to gone, okay, to be sold. Okay, now if you be very careful, look at this period right here from 2020 to about at the beginning March of 2022, the number are super low. We are talking about 0.5, 0.6, 0.8, right? And all of a sudden, starting from May, the number become worse and worse and worse, and nowadays is 1.4, meaning that there's a lot of listings that is active on the market. Those are active, including the one that new coming onto the market, and also the one that that maybe they are under contract but they back out. Okay, so there's a lot of listing nowadays for that. Okay, 1.4 is a high jump compared to a couple months ago. Right, so that's chart number one, which is this is the number one topic that we are going to talk about recently, right? Because we have been talking about during this period right here, during June of 2020 to March of 2022, everybody complains about how low the supply is, right? We have no inventory on the market and buyers are going crazy to buy whatever get onto the market with a very high price. But now we have a very large amount of supply on the market. However, though, as you know, because the interest rate is so high right now, nobody want to buy. All right, not only just the regular buyers for the primary home and secondary home, but also investor as well. They are also being more careful in terms of interest rates because they're too high right now, and the price of the home is too high. It doesn't go down yet, right? So it's still at a high price. For that reason, they are very careful on that and demand. So as you see, this is the perfect storm for what I'm gonna talk about next, right? The supply keep rising, but the demand keep going down slowly, right? So eventually, it's gonna flip the market at this time. It's gonna switch the market at that time. Okay. So this is all the reason that we are having the situation right now. Okay, supply is increasing, and the interest rate is already high, and it is predicted to be higher. Okay, it's nothing gonna be less. Okay, and we don't foresee that. Okay, with the current market right now, we can foresee that it's gonna keep going higher and higher. Okay, so if you are looking for a lower interest rate, perhaps you're gonna be waiting for a really long time for that reason. Okay. Now the next chart that I'm gonna show you is this is the listing under contract. Okay, this is the listing under contract. Now the blue chart right here represents 2021 number, and the gold, I don't know what color it is. Gold is the 2022 number, right? As I told you before. Let me show you a different screen. Maybe it's going to be better. Okay, so as I told you before, we have kind of the same situation right here where we see the listing. By the way, listing under contract, meaning that the number of houses that currently in escrow, and right in the process of closing. Okay, in the process of closing at the moment of time, and the horizontal chart is the week. Okay, the week of the year. We have the same same trend compared to 2021 versus 2022, right? Where it goes down. However, though, the in 2022 the process started way before 2021. Okay, it started way before 2021, where in 2021, the start of the decline is somewhere around middle of April, but the decline of 2022 already starts somewhere middle of February. So we are 2 months behind 2022. Right, and the trend gonna keep going down. We don't see anything that could help. Okay, so on 2021, around beginning of August, okay, beginning of August, we see a backup because iBuyer institutional buyers start acquiring more property during that time, and therefore increase the number of listings under contract, right? And therefore it become a horizontal line right here, almost a horizontal line right here, right? It helps the situation. Okay, now in 2022, do we have that or not? That is the big question. Do we have the same situation or not, where some companies, some big guy gonna become a saver of the market, right? Acquiring more property. We don't know that, right? Even though iBuyers are still on the market, Opendoor is still on the market, Redfin is still on the market, OfferPad is still on the market. Obviously, we don't have Zillow anymore. Now, some other iBuyer institutional buyers are actually slowing down the process, and the price is actually, even though they're still on the market, but it's still it goes lower. Okay, so it goes lower, which gonna cause a discouragement for the seller to accept those, right? Because they're still in the mood of they can sell higher. Talking to that, we're gonna talk about pricing strategy later on in this video. So stay tuned if you want to have a success listing situation. Okay, so the situation is that they start offering lower than before, and therefore the chance that they get accepted is low, okay, compared to other offer. And in that situation, is even worse because we don't have the listing under contract. Is there any other buyers on the market, right? Besides iBuyers, we have regular buyers, which is scale away because of high interest rates. We have iBuyers also right now have a lower offer price, therefore it's less likely to be accepted by the seller. And the smaller investors, right, which is my group right here, Happy Home, Happy Investor. Do we even dare to make the move, right? Because if the interest rate is high for regular buyers, we as a normal smaller investor, we also have we have to suffer a higher interest rate as well. So all type of buyers are not ready to help, similar to the situation of 2021. So who's gonna help in this market to help us start going up? The question is very, very rare, right? There's no reason for us to believe that someone gonna jump in, some big company gonna jump in to pick up those available listing on the markets. So long story short, I predict that it's going to go further down. The number of listing under contract going to continue going further down. It's going to worse for not only the seller but also for the buyers as well. Why do I say that? For the seller though, the more houses onto the market, the more houses are active on the market, the more competition that one seller has to compete to win the buyers, right? So that means you have to prepare the house better. That means you have to have the price better. That means you have to be willing to give concession. That means you have to be more flexible in terms of asking for repair. Those type of things is the thing that the seller doesn't want, right? And you have been spoiled for the last 1 or 2 years. Unfortunately, you have to change your behavior right now. For the buyers, why is it bad? Okay, the buyer is bad because the fear, all right, the emotion, the fear. Why so many houses on the market right now? What is going on? Should I buy it? Right? Is it a good time for me to buy? What if the market goes down? So you're afraid of this situation, and therefore you don't want to move forward to buy a house. So it's not a situation that anyone want to look at this time. All right, so that's number 2 chart I want to share with you. This is unfortunately this is gonna be the most scary video that not scary, but the most bad news video that I have to share with you in this market right here. Now, more bad news coming. The listings rate, okay, it's the success listing rate. And this is very interesting chart that I want to show with you. This is the listing success rate. Okay, so it's basically the percentage of successfully listed housing. Okay, so for 100 houses listed on the market, how many houses actually get sold? Okay, so we say here as of June 18, right? There's about 85%. Okay, in 2022, there's about 85% listing gets sold on the market. Now, it seems to be a high number right now, but if you look at number 1, it's already go down. Okay, it starts going down from it's peak around middle March, and then it start going down from there. Okay, so there's more and more houses that cannot be sold. It either expired, meaning that the seller looking for a new agent, resign a contract, or it get canceled. The seller is tired of it and they no longer want to sell. Okay, so that's number 1. Okay, now a little bit good news. If you are looking at 2008 or 2009 even, right, the percentage that we have right now of 2020 and 2021, 2022 even, is still very high compared to 2008 and 2009, where we have a crisis, right, a market crash, right? Now, but the purpose of this video, it doesn't gonna try to conform, give you a comfortable of, hey, we still have a high success rate, right? I'm gonna review one thing that is very alarming. Okay, if you go further down 2007, right, the success rate is lower than 2008, and of course 2008 is lower than 2009, right? Because 2009 is kind of the market kind of start backing up already. 2006 is somewhere here. Now, if you look at 2005, you're going to see why it is so alarming, right? 2004 and 2005. 2004, we have a really good trend of going up. The blue bar right here, the blue bar, okay? The blue bar is going up, right? The blue chart, the blue chart is going up in 2004. I got to remove that so that I can demonstrate this, okay? Let me put into this one. So this right here, the gold one is 2022, and this green is 2005. Both lines actually already met. So my theory is this. So if it is continue matching 2005 version of the chart, you're gonna have a really bad year next year for the seller right here, the blue one, and then even worse in 2007, right? And that's when everything crashed, right? It is at the bottom of the charts right here. So it's everything crash. And of course, you get better in 2008 and better in 2009, right? But my alarming is that if it continue, number one, if it continue this rate, most likely next year, we're going to see this one. And lastly, in 2024, we're going to happen to see this. All right. So this is very bad news for the markets right now because it's very happen. It's happened that everything is meeting the 2005 version. Now, whether it's going to be this bad or not, I don't know. Right. A lot of experts say it's not. I also used to say it's not as well, but who knows, right? Maybe it's going to be the same, but it's maybe somewhere here instead of that bad. Okay, we don't know yet. So as time goes by, we're gonna see more information, and I'll let you know. But right now, what we see is we already meet the number of 2005. So it's gonna happening soon. The second alarming in this chart is that if you look at more careful, the rate of the golden line is also deeper than the green, right? You can see that it's deeper than the green, so it may happening sooner than 2005 even, right? How much we don't know. We know that it's potentially going to happening. We know that it could be sooner, in my opinion. But rather than at the end of 2005, right? It could be sooner than at the end of 2022, right? It could be sooner. But how much of the decrease, that we don't know yet. Okay, so this chart is very alarming, and I feel it's very interesting to show to you. Please note that I am always thinking about a positive thinking. In all situations, we can make everything work as long as the number makes sense. So if you are investing, perhaps this is a good time for you to sit down and calculate your numbers more carefully to ensure that you can have a successful long-term return of investment, right? Rather than you only do 1 or 2 months, maybe you do 6 or 8 or 12 months calculation, right? Or maybe even more, right? With the current information. For the home buyers and sellers who do not have to sell, regular home buyers and sellers who do not have to sell, right? You only have one house, you do not need any reason to sell. Right? Or the buyers, you already have a house or you're already in a good rental place, you don't need to go. You don't need to buy another house. My advice is just stay put and wait for the market to see what is going on right now, right? Because right now, a lot of things unpredictable at this time. And until that happens for sure, we don't know what's going on. Unless you are in a situation that, for example, you must sell. For example, you lose your job, you no longer have a second income, and you're not qualified, you're not be able to support the mortgage, and sell it. Otherwise, you're going to be in much trouble, financial problem later on. Or if you're in a situation that your lease expires and you have to find a new place to stay, and then you feel like buying is still better than renting, then sure, then buy it. But if you are not in those situations, you already have a house to stay, don't do anything yet. I guess I'm maybe the only realtor that advise so. However, though, for the investing side is a different story, and I would say if it's more likely that you have to recalculate the number in a better, in more careful, so that you can win in the situation, in any situation that you are in. All right, in all the market, there always a way for you to win. Okay, as long as you recalculate the number more carefully, think of it as a longer term instead of shorter term. Okay. I have three more charts to show, but I think it's too much of the information right now already. So I'm gonna save those three charts for another conversation. Thank you so much, everyone. And if you do have any question about all of the information I share with you today, feel free to give me a call. My number is below there, 602-515-2442. Thank you. Bye-bye.